the trends on all time frames are still pointing to higher pricing. The daily chart is pointing to higher pricing, the weekly, the monthly chart, quarterly charts, everything. So it's really exciting to be in the precious metal space. I hold physical metals. That's my main way of trading the precious metal space, and really just got to ride this trend. And I mean, we're in a perfect environment for gold and all precious metals to shine, to really do well, because people just don't trust systems. They don't trust the governments. They don't trust currencies. We got wars going on. I mean, there's just so much stuff. I mean, every year is a better story for precious metals to go higher. And I feel like we're getting to this major tipping point now. You know, we got central banks loading up on physical gold and silver. That is not a good sign. It's a good sign for higher gold, but it's not a good sign for the economy, the government systems, because something's going to break. And that's what gold has been warning us a long time. When gold outperforms the stock market or keeps up and moves up with it, there's something big and bad brewing that is going to eventually hit the market. And we don't know what it is until it actually happens, but it is a huge warning sign. And precious metals are one of those assets that do well during this uncertainty and worry phase in the markets.
You have kind of a price range for gold of, I think it was 46.85 to kind of 5,100. Is that something that you could foresee in the near term, or is this over the course of the next 12, 18 months? What are the charts showing you?
Yeah, so this is a weekly chart. So potentially gold could make this run in the next 2 to 3 months. And I mean, that falls in line with, I don't know the name of the cycle, but these multiple cycles that go back, centuries, and there's multiple cycles within it. And 2026 is actually charted to be one of the years where there's going to be massive turmoil and chaos and bubbles in pricing, that it's a time to lock in profits. And that's more so acting around the stock market. I think we're going to see the stock market stall out, and we're going to see the economy weaken in 2026. I think January could be a very big turnaround month. I think it's going to be a lot of selling next year in 2026. And I think a lot of selling in the stock market space that cash is going to be raised, and it's going to look to go somewhere. And money chases returns. It's just typical emotional traders. Whatever's working is where more money is going to go. So if people are selling their stocks because they're scared, they're going to dump it into precious metals. And so I think we're going to see very similar to 2007, as the stock market starts to sell off, all that money is going to come out of equities, which is a massive market, tons of money, and it's going to get jammed into a tiny precious metals complex. The precious metal space isn't very big. So when you take massive outflows from the stock market and jam them into gold and silver and platinum and palladium and miners, we're going to see, I think, gold, the whole precious metal space do very well next year. But I think 2026, the stock market and the economy is going to get pretty ugly.
Yeah, I had Simon Hunt on a few weeks ago, and he was talking about, I think it's the Samuel Benner cycle, or some gentleman who created it in like the late 1800s. And it actually had 2026 as a year of a significant market correction. I think Simon's calling for like a 20 to 30% correction potentially.
Yeah.
You talked about the miners. Have you done any technical work on like the GDX, for example?
Yeah, if we take a look at the GDX, it has somewhat similar price action as gold in terms of we see a percentage rally up, a significant rally, like 40, 50%. Then we see another 40, 50%. If we go here, we're at another 40, 50%. So again, we're just seeing a series of rallies into pauses. And that's what, obviously they're more volatile. There's more potential in volatile assets. And so miners are building another launch pad, and they are pointing to, just based on really basic analysis here, they're pointing to another 40 to 50% move. And we could draw a Fibonacci target here on GDX for where those upside targets are. And we're looking at about $108 for GDX, which let's just see what percentage wise that is. Well, from the current price, it's about 34%, but from the overall trend rally, it's going to probably be about 50 or so percent. Yeah. So that's the next move, is about 108 to the upside. So there's quite a bit of upside potential when it comes to, I think, the whole precious metals complex. If we have a similar move to what happened in 2007 in terms of price action, where we saw gold, silver, miners, platinum, and palladium, they all came to life, volume picked up. It became, the complex that everybody wanted to move into. Based on that scenario, we're showing like, 50, 60% move across the board in like silver, platinum, and palladium. Gold, I think, could rally another 25 to 35%. Miners could rally another 30 to 50% as well. So there's a lot of things playing out that are pointing to obviously some big gains in this space. I think the big caveat, the big thing people need to understand, and most people aren't going to like to hear this, is I also think it's the last major run in precious metals before we go into a much bigger reset that could take several years to come back to the highs. And I'm actually looking to trim off my physical gold position potentially in 2 or 3 months if we do get this final big, what I think is a final big push, because based on all the sentiment and the money flows and how I track everything and the sentiment, this last push will be the one that sucks everybody into the precious metal space who's not in, who's open to getting into it. And it's going to create this huge parabolic move to the upside. And then we're going to have the bad news hit and all this stuff. The stock market could roll over. And then I think we're going to see selling pressure. So I think this is an opportunity. I think it's a trade for the precious metals space. But I also think there's going to be a time when you're going to want to be locking in gains, because if we do hit these targets, we've got all kinds of different time cycles coming into play. People are going to be feeling euphoric, like they know what they're doing and they're going to be rich and there's so much more upside potential. The next targets are like 8,000 and 10,000 for gold. Like people start reaching for the stars. Yeah. And usually when everybody it becomes a feeding frenzy, euphoric phase. That's usually right when it actually tops and catches most people off guard. And I think this next push is going to be that FOMO, that euphoric phase that happens just before a major market top. And actually a good chart of this is if we go to the market participant, their emotions. I believe we're going to have this big push up, this euphoric phase where everybody thinks they're a genius who's, bought and held it, and it's rocketing higher. And usually at that phase, we're going to just see a very sharp drop, and then we're going to go through a big financial reset, and it will pull precious metals down with it. I think most times for the initial big wave of selling in the equities market, and when the economy turns sour for a window of potentially 6 to 8 months, even the best investments, which could be gold and silver at that time, are still going to get hit and sold. Yeah. They might rebound and become resilient quickly, but they'll still get hit. So the whole precious metal space is very, very exciting because we're all in big profits. And I think there's one more big push, but I'm actually going to be looking to trim off some position and lock in gains because I think it'll be a little bit of a feeding frenzy, and we might get a big pullback and a bigger reset in the precious metal space that I think a lot of people don't want to think about or try to navigate.
The one issue, obviously I'm a gold bug and precious metal bull. The one issue with precious metals is if they do enter bear markets, more often than not, these bear markets are multi-years, sometimes decades long.
Yeah.
Are you looking at it as it could be a multi-year bear market after the next leg up, or just a significant pullback because everything else is going to correct significantly? In a world of rising deficits and currency dilution, many Americans are adding precious metals to their retirement accounts. And when it comes to physical gold and silver in an IRA, one thing matters above everything else: transparency. Unfortunately, the precious metals space is still full of hidden markups, confusing spreads, and fee structures most people never notice until it's too late. That's why so many U.S. investors are turning to our sponsor of the pod, iTrust Capital. iTrust Capital offers fair, straightforward pricing over spot with zero storage fees. In a market where many dealers quietly gouge retail investors, that kind of transparency matters. iTrust also brings precious metals into the modern era. Using blockchain technology, iTrust lets you trade gold and silver 24/7, not just during banking hours. When the market moves, you can act. And if you prefer physical metal, iTrust Capital supports in-kind distributions, meaning you can receive real gold or silver from your IRA in whatever form you want: bars, coins, you name it. And for those who want exposure to crypto, iTrust lets you hold Bitcoin and Ethereum inside the same IRA as your metals. So if you're a U.S. investor looking for a modern, transparent way to own gold, silver, or crypto inside a tax-advantaged IRA, use our link in the video description to get our partnership offer: a $100 funding bonus when you open and fund your account with iTrust Capital.
Yeah, I think it'll be a significant pullback. I mean, this is the weekly chart of gold. I think there's potential we could see gold have if we go up to about 5,200, I think gold could pull back about 30 to 40%, which brings it back down to, the low, 3,200, 3,300, somewhere in that range. And I do think it could take a year or two. I do think it'll be fairly resilient. I think it'll be fairly sharp, much like what happened in 2008. I think we could see that 30 to 40% pullback. It might take a year or two to recover and rebound. And then I think it's off to the races. So I think it'll be short lived, but I mean, that's a big haircut. If you can, I don't want to waste time in it, because what happens is if it's not just this little pullback, it could be this, as you said, exactly. and it takes forever to come back. I mean, look at the years, right? And that's the big thing with commodities. They go dormant for a long time, and eventually you just like give up on it. When you give up on it and close out those trades, that's when it comes to life again. You're like, I just sold those things.
No, it's not for the faint of heart, for sure. Okay, that's a good breakdown on gold. I want to jump into silver. It's had an unbelievable run this year, stealing the spotlight from gold, especially lately. What are the technicals saying now for silver?
Yeah, silver's obviously at all-time highs. It's already broken out. I'm going to drop back to the daily chart just because it gives us a nice view of the shorter-term price charts. Obviously, we've had this pause, this kind of multi-month pause here, and now it's broken out. It's got this high momentum bull flag pattern, which is pointing to about $68 an ounce, and that could literally happen like in 3 or 4 days. This is if this pattern does pop and break to the upside, silver is going to have another explosive move, and it's a pretty significant gain. I mean, to get up to about 38, it'll be about a 17% move that could happen. In as we can see for silver, it happened really only in a few bars here last time. So there's a lot of explosive move built into silver. It's a very tiny market, and now that everybody has kind of got their eye on precious metals, people naturally look for what's the fastest moving thing so I can make the most money. And so silver is one of those. It's such a tiny market that when a lot of people focus and look at it and they dump money in at the same time, it moves fast. And so that's the benefit of silver, is if you can catch these moves, they're very explosive. So silver's got a lot of upside potential based on the charts. If we go and look at the weekly chart and the bigger picture, it's a little bit messier, harder to pick a target for it. I like to kind of follow gold for these targets. It kind of made a running correction to the upside. If we were to grab the Fibonacci levels based on a few of these patterns, we could say, well, based on this run up and this pullback, it almost doesn't matter which pattern I've grabbed. We've blown past those. We're at all-time highs. And, we can zoom into a chart and just grab this most recent low, this rally up and this pullback. And that tells us kind of where the next short-term target is, which is about 63. The one that gives us that 68 target is the daily chart. We really have to zoom into the short-term charts to get an idea of where silver could move. So if we were to just look at this recent pop in silver and this tight little pause, it's pointing right up into this 68, 69 level, just about that 17, 18% move. So silver is not nearly as clean as gold. It never really has been. It's a much noisier chart, lots more volatility. It constantly makes some higher highs and then lower lows, and it's a really great way to chop you up and get you confused and stressed out. So I always like to look at gold as the barometer, as the tide of precious metals going up with gold, and then you really just kind of, invest in silver along with it, because they're kind of the same trade. It's just one's a little harder to read, so just use the big brother or the big sister gold as the dominant trend at play.